Alrighty, folks, this is one of the weekly episodes I look forward to. It's where Millennial Mike goes through and digs out the spicy questions, the hater questions, the good questions that really require more in-depth analysis. And sometimes he just likes to poke the bear and see how I react. Let's see what happens this week. How you doing, buddy?
I'm good. I'm good. Happy to be here, happy to chat, and happy to go through the comment section to see what people are thinking. And this may be a surprise to you, but as always, one of the most fiery topics of the day is usually around interest rates and the Fed and market crashes. So we're going to start with one of your favorite topics, and that's the market's going to crash any day now, right?
Yeah.
So this one comes from HMJ469. He says, Mike, is it possible that a commercial crash in real estate could be the domino that causes a housing real estate crash? If a commercial real estate crash causes mass layoffs, couldn't this cause massive foreclosures?
I'm glad you picked that one. I think that was an interesting brain teaser because I think if you just look at it and you listen to the crash bros who are really starting to spit this, I guess it makes logical sense if you're not in the business, if you don't understand what's going on. But let's break this down. Let's pretend you have an office building and let's pretend we have a multifamily building. Both are considered commercial. Both are being foreclosed. Okay, let's just assume that. What happens? Does it lead to mass layoffs? Does it lead to all of these things? Well, in the case of multifamily, the tenants have no idea that the building is being foreclosed. It's done outside the system. It's not like they've gotten notices. It's not like they have to pack up and leave. It's not like the apartment's going to be boarded up and all of that. That's not what happens. What will happen is it will be sold to another buyer who will get a new debt structure. They will get a notice probably pretty quickly after that they're going to pay somebody else. So that doesn't lead to foreclosures. The rich, the equity, they lose, right? This is all about equity losing. The debt will lose a little, but as I've been saying for quite a while, it's all the equity that's going to zero. All right, let's switch to office building. Kind of the same thing. I've talked about on my channel office buildings in Washington, D.C., and Denver, and San Francisco, and plenty of other areas that are being sold for 75% discounts. Many of these are 50% occupied. It's the same deal. If you happen to be leasing space in there, you're just going to get a notice that you need to pay someone else. A commercial real estate crash does not lead to mass layoffs. It just doesn't happen. And if you have some, renter that lives in his mom's basement telling you that, you should stop listening to him because it just doesn't make sense. The one little case that I will agree we have to watch for is lending. And I've talked about this for over a year. In fact, I remember the conversation with Lance Lambert, who was at Fortune at the time, saying, Lance, this Silicon Valley Bank thing, this could be the sign of the future. And what do I mean by that? Basically, banks have to take their balance sheet, perform mark to market, which is what took Silicon Valley Bank out. They had these treasuries sitting on their balance sheet that they had to sell, thus mark to market, and bingo, bango, they're not liquid. So if we have enough commercial banks who play a big game in multifamily, in lending, enough of them have problems, they could stop lending, which will slow down business formation, which will slow down all of these things, but it doesn't lead to mass layoffs. And then really the crux of the question, I do not believe commercial real estate pain, which I will call a crash. I would call a 20% drop down in commercial real estate a crash. Office at 40 is a crash. It doesn't bleed to single family homes. Why is that? Well, whether we like it or not, the government stands ready to buy single family home mortgages, Fannie and Freddie, and they won't let the single family market. So the answer is no, it doesn't work that way.
So, is there anything that could happen in the commercial real estate space? And even a black, so is there anything that could happen that would transfer over and tear down residential real estate?
You have to watch, it's the lending. It's lending locked up. And lending really never locks up. They make the criteria so tight or interest rates so high, it could become a problem. Right? If we woke up the other day, and I just did my daily financial news right before we started recording this, and I let everybody know that I'm scared for the June CPI reading. Let's just assume the June CPI reading spikes to 4%. Currently, it's at 3.2. It's expected to go 3.5. Let's say it goes to 4. The Fed will come out and raise rates. And let's say we take mortgage rates to 9%. 9. Even shoot, take it to 10. It only affects transactions. If you happen to be a seller who has to sell in a 10% environment, you're either going to sell creatively or take a massive haircut. But what will happen with 10% mortgage rates, like we've seen already, is transactions will crash. It doesn't roll through to values. It just doesn't.
Well, on the topic of interest rates and lending, that is our next topic. And this question comes from Freestyle Obsessed, or this comment, I suppose. He says, in the last week, I've had 4 cancellations. Majority of them were from increased interest rates and not having rates locked. 7% absolutely changes the market. So it sounds like he's maybe a mortgage loan officer.
Yeah, a mortgage or real estate agent. Yeah, I really am starting to see the market behave different. And it's really wild because I've been studying the consumer for 30 years. I can see them moving en masse, and I call it on the show all the time. Right now, it is very clear. Mortgage rates above 7, bad, i.e. cancellations. Mortgage rates below 7, good. Why is this important? Well, it's really wild. We've been growing inventory for 20 weeks. Last week, we had interest rates tick below 7% for a couple of days. And that was enough to have inventory stop building. We actually went negative, according to Housing Wire and Logan Mohtashami. And it really is that simple. And if you didn't do a rate lock, if you like it, lock it, as Matt, the mortgage guy says, you're going to cancel. And it's really funny because when you do the math, right, 7.02 versus 6.98, payment's like $7 difference.
Right.
But it's that psychological, I'm not getting a 7. I'll get a 6. And that's what's happening right now. This is just more evidence. If you were a real estate agent, which I'm going to guess they are, they got a property in contract, but they didn't lock their mortgage. And they went there expecting 6.9 and they got 7.15. They're like, screw that, I'm out. That's what happened, I think.
Mm-hmm. Well, and that makes me, so that's what we talk about when we talk about rates going up affecting the market. But then we talk about what happens when rates go down. How does that affect the market? Is it really a good thing? This question is from Sarah-DZ1HK. She says, Michael, do you have any data on what has happened historically after the Fed starts cutting? I would love to see a video on that topic.
Well, there's a couple of things. I think what she's pointing to is, historically speaking, the Fed cuts rates as we enter a recession, which is pretty wild to think about. I think what a lot of people are missing, and I by a lot of people, I mean the most respected economists, right? People that I look up to as an economist. I think a lot of people are failing to realize that this time it actually is a little bit different. And what do I mean by that? I mean, just look at the M2 money supply. Look at what we did to the M2 money supply since 2020. It's up something like $9 trillion or billion, whatever it is, a whole lot of money. So I think a lot of our historical economic metrics aren't going to play this time. For example, we've seen the M2 money supply decrease pretty significantly over the last 12 to 18 months. And Mike, it's only done that one other time, and that led to the Great Depression. However, if you zoom out past the last 18 months, you will realize that the M2 money supply is still way above trend. Why is that important? It just goes to show me that there's more money in the system than we appreciate. And when we look at historical metrics, like when the Fed cuts, recessions happen, or unemployment spikes before a recession, just all these things, they may not apply this time because there's just so much money in the system. And I think it's distorting everything.
Well, it certainly is distorting people's perception of reality. I was going through one of your videos and I didn't pull any of the comments off this one for this one, but you had asked the audience what they did with their stimulus checks. And the people, Bitcoin, to your credit, your audience is more educated than most. There's people in there who are like, I saved it for a down payment.
Yeah.
Which good. But most people did not. All that extra money went somewhere.
You know what? And this is an important point. This is important. There has been a long running thesis that we should give people money and that will equalize everything. However, we now have factual evidence of doing that. If you rain down money from helicopters, which we did with 3 stimulus checks or whatever it was, people will not appreciate it. They will blow through it and they will expect it again. Now we know that, modern monetary theory doesn't work.
So I'm taking it that Michael Zuber is against universal basic income.
Yeah. Yeah, UBI. Well, hey, you know what? Bring UBI to Fresno, California. Fine by me. It'll just raise rents and I'll be okay with that. It's fine.
Everybody, $1,000 a month in UBI. Everyone's rent just went up $1,000 a month.
Probably $600 easy. Yeah, exactly.
All right. Well, let's transition over to real estate. So you always talk about buying. In fact, you're known as somebody who really helps people get started in buying real estate, how to figure out what a good and great deal and what an average deal is. But somebody asked about what about it's like to sell. And so this one comes from R1 Life Arizona, says, will you talk about the process and how you sell properties that are rental properties? Do you wait until the lease is up and then list the property, or do you list it with a renter in it or something else? What's your process to sell?
That's a good question. So the answer is it depends, which I guess is probably to be expected. If it's a multifamily property, my buyers most of the time are investors, so I will sell those full. If it's a single family home, at least let me think. I think there's probably only 2 or 3 single family homes. There's only 2 or 3 single family homes in my portfolio that I would sell with a tenant because they're very much investor areas of Fresno. But let's assume I was in a good area of town. I had a good school districts. I would give my tenant a 60-day notice or whatever is legally required. And I would clean it up and sell it because a home buyer is going to pay more than an investor. So if it's multifamily, leave full. If it's single family home, most of the time, vacate, clean up, sell.
Now, a few years back, you were doing a lot of pride of ownership rentals.
Yep.
Were you putting renters in that and selling it?
Oh yeah, my end buyers were investors. I happened to find a little hole in the matrix where I could buy slumlord properties for cash. I could then repair them, stick a tenant in, and sell for a good yield. It didn't last long. I think it lasted like 20 months, but I did 53 of them. And that was fun. Now I didn't know what it was called. I guess people call those turnkey nows. I didn't know if that's what it was called. But yeah, I was having fun. I was bored. So yeah, I was buying junkers, I mean, if I had to do it over, I should have sold to homeowners. I would have made more money. But that wasn't my goal. My goal wasn't to maximize money. It was to help people get started.
Yeah, I was just bored. So, I bought 53 slumlord properties in a 20-month period and just remodeled them for the fun of it, and sell them because who cares, right?
Yeah, made over $1 million. I was really bored.
Well, that's something that people can feel jealous about right now, because I'm sure a lot of people would love to be bored in that situation. So, but I'll tell you what, I do like the whole buying from slumlords. I always say it all the time. I love slumlords. Sure, I think they should go to jail for what they do to tenants, but I absolutely love buying real estate from them because their lack of taking care of a property is my gain. I now get to buy something either seller financed and get good terms, or something that's significantly under market value. And now I get to force the equity on it, which is a great position to be in.
Love it.
All right. So a couple other questions. Let's talk about Airbnb Bust, because there's a lot of word that there's pain and blood in the streets when it comes to Airbnb, and people are giving properties back and losing their butt. So this question comes from Love for Puppies. Sounds like
I like it. I like it.
So Love for Puppy says, I am seeing a similar situation in Indianapolis, but for long-term rentals. Some homes that were flipped will list the potential rental income, but when they tried to rent it out for that much over a year, they were unsuccessful, and so they are now selling. Yet with today's rates, excellent credit, and a decent down payment, it would cost you to rent it out if you need a mortgage to buy. Some sellers still believe that the homes will rent at a certain price and won't come down on their sale price. I don't get it, but the homes are sitting vacant. So this was on a video about Airbnb Bust, and they said they were seeing the same thing in long-term rentals, that delusional investors are expecting too much from Airbnb or too much from long-term rentals, and they're getting scorched.
No, this is the human behavior. I think this happens for lots of sellers. It's called anchoring. Lots of people get anchored on a number. Maybe you're anchored on what you paid. Maybe you're anchored on what your neighbor sold. Maybe you're anchoring on a Zillow number. It's particularly dangerous if you anchor on a high number, and that could be a price or it could be rent, like in this case. The anchoring bias is a way to go broke. You should learn to appreciate what the market is doing. The market is constantly moving. The market is constantly finding an equilibrium, and the market doesn't care what you're anchored on. But if you are anchored on something and you don't adjust, you will eventually go broke and lose the property. Yeah, and this is what happening. I'm seeing it a lot now in some California towns. It's where my connections are the greatest in California, and there are people in Big Bear and other parts of Southern California that were very Airbnb heavy, getting their ass kicked. Like Palm Springs. Palm Springs is probably the greatest example. I'm seeing more and more properties that were bought for Airbnb, fixed up, being sold for 50% off. And that's to be expected. The rules changed, the game's changed. Real estate is never easy, Mike. That anytime people come into a game and they're pitching easy, I run away. And if you rewind the clock 24 months, people were pitching Airbnb. Shoot, people were saying you could be an Airbnb millionaire and never own properties. What kind of nonsense is that?
Arbitrage.
Right? Arbitrage. And I know it's possible, but it's never as easy as people make. And then they were talking about multifamily value add. Let's do some bridge debt, some 1 year IO. I mean, it is so predictable. It's not funny. I've got lots of receipts calling for both these things to blow up. And yeah, if you are acting like real estate is can't miss or easy, you're going to get your ass kicked. It's just that simple.
Well, we had talked about the realities of human nature around universal basic income and extra stimulus spending. And there seems to be other realities around human nature when it comes to things like investing in real estate. Somebody has a good idea, and immediately people try to figure out, how can I streamline it, make it go faster so that I can get to the end quicker, and do what? Skip the work. Yeah, that's not what you talk about on your channel.
No, you can never skip the line. You just can't skip the line. And I really think there's just a natural human behavior to want it easy and fast. That's not real estate. It's not easy and it's not fast. In fact, the first 5 years suck.
And talking about something that wasn't easy and wasn't fast, and the first 5 years were filled worth of work, your YouTube channel just crossed the threshold of making $200,000 in ad revenue. Yeah. Tell us about that. When you first started out, did you ever think that you would get to that point?
No. I had I didn't know monetization was a thing, but if you would have asked me, I could never imagine making $1,000 on YouTube. I am not a normal YouTube creator. I don't edit videos. I don't jump cut. I frankly make too many videos. I make too many videos. I post 5 videos a day, and the YouTube algorithm fucking hates me. It just does. It hates me. But I'm not doing this for the algorithm. I'm not trying to game some systems. I'm trying to change lives. The other thing that you really quickly realize is if you're chasing impact versus clicks, it's just a slow grind. But I have fun every day. I have fun every day, and I'm not stopping.
Well, chasing impact versus clicks is a great thing to tease, because in our next video, we're going to be going over a video from Tom Bayou where he talks about the audience driving what he's making in terms of impact versus clicks. So quick teaser, we'll get to that next. We got a couple questions left first. So this one is, in an alternate universe, in the multiverse, this is a question for you, Zuber. This one comes from Austin Blake Wisen Hunt 491. He says, Zuber, I'm a fairly new listener, but I've been consuming a ton of your content. I would love to see how different your life and net worth would be today if you'd invested in the S&P instead of
Mm.
real estate throughout your life. So in an alternate universe, Mike, if instead of real estate you did stocks, how different would your life be?
You know what? I remember that question. I actually went and sketched out the math. I went back and pulled up the S&P index and all of that. And it's not even close. I would still be working. Um, I would probably be a single digit millionaire at this point because I'm, been doing it for 20 some odd years. Not the multi or deca that I am now. Um, Dude, people don't realize this. My entire portfolio, I have none of my own money. In fact, I think I did the math 6 months ago. I've taken out like $1 million. I have none of it. Like I started my whole investing journey with 40 grand.
Mhm.
Over the years, I probably put up upwards of 120, 150 in. I've taken that out and over $1 million more. I could never do that with the S&P.
Right.
So I'd still be working. I would have a net worth, but no monthly income. Dude, I live on my cash flow,
Mhm.
right? And fun fact, I just got my tax return and I owe $100,000. I owe 100 grand.
Ouch.
Not ouch. That means I made a shit ton of money
Right,
and I don't
right.
work. Right? It's not ouch. It's like, yeah, okay, I'll write that check. Right. So, I mean, to all the crash bros out there that like to make fun of me, dude, I get people on my channel, these freaking haters, saying, oh, look at this other so and so channel. They do one video a day and they're blowing you away. I'm like, you idiots. We're not playing the same game. I'm already good.
Mhm.
They got to freaking make scary videos to pay their rent. I haven't been worried about rent for 10 years.
That is the beauty of real estate, and one of the things that I'm looking forward to the most. As a police officer, I'm relatively constrained on sharing political opinions online or even just talking about police officer related topics online. And it's very frustrated to be in a position where you can't say exactly what you want. But that's the beauty of your real estate. You've got enough money that you have FU money. You can say what you want to who you want, as many videos a day as you want. You don't have to chase the clicks, the ad
Yep.
revenue, and the audience. You just get to do whatever the hell you feel like.
Yeah, and just to tease this video coming up, folks, this video with Tom Bayou, I'm gonna let it go. So do not watch this one with your kids. I will unfilter because this one pissed me off just as a little tease. But I'm gonna let the F bombs go. Do not watch this next one with your kids. It is not it's not gonna be for the faint of heart.
Okay. All right. Very last question, Mike. Very last question. And this is one that first time home buyers are interested in, wannabe real estate investors are interested in, experienced seasoned real estate investors are interested in. And this topic is how to fix the housing market. So this comment came from someone, and I forgot to put their name down. And they said that in a normal housing market, it requires building, building, and building,
Mhm.
building more starter homes. The government has done nothing to help us build more homes to get back to a normal housing market. So how do you think we should start fixing the housing market?
Well, so first off, I agree with the sentiment of that comment. Um, you've got to we haven't so if you look at the numbers, like at the macro level, we're underbuilt. I've seen Lance Lambert at Resi Club say 2 million, John Burns Real Estate Consulting say 4 million. Let's just split the difference. We're 3 million homes short. But that's missing the mark because all homes aren't equal. We need to build smaller entry level homes. Now, thankfully, last year the average size of the home went down 3%, but we've got to build the 997 square foot, 3 bedroom, 1.5. We've got to build the smaller homes. So we need to encourage that behavior and we need to change the regulation to encourage that. Builders are for profit engines. And right now, or at least for the last decade or so, it has only been profitable to build McMansions. The government, the city regulations, they need to look themselves in the mirror and go, we did that. We did that. Because the builders are going to go where they can make a profit. It's how capitalism works. If they can't make money building a 997 square foot home, they're not going to build them. So I think we need to look at the regulations, the fees, the structures. If the government wanted to do anything, they should, hey, we'll give 5 grand or 2 grand or whatever to every home that you build under 1,000 square foot or something. I mean, we need we need new entry level homes, and we need a lot of them.
Right. I think that, every time that there's a major election cycle, typically there's an issue that the politician is running on. Maybe it's
Yep.
end the war or it's fix the economy. And I think at some point in the next 20 years, with the housing problem being the way that it is, I think that one of the major issues that will probably come to bear is someone will be smart enough to say, we have to fix the housing market. And that will lead to an election for that person.
I hope so. I mean, I getting on the property ladder, even if it's just with your primary residence, is such a hack to getting wealthy. I mean, look at any statistics, ownership versus renters over time.
Right.
And the last thing I'll say about this is if you really understand that inflation is a feature and not a bug, you will understand that owning assets with 30-year fixed rate debt is the greatest hack around.
Absolutely. Well, Mike, those were all the questions that we got from the comment section. Remember, if you're watching this video and you want a question answered by Mike, you can send me an Instagram message and I'll put it in a video. You can also send us videos that you want him to react to, like the Tom Bayou clip we're going to be watching next.
Awesome. Thank you so much, Mike. I can't believe that you still go through all these videos and get these comments. I appreciate you more than you know. Thank you.
Happy to do it.